Hi there, SKIDDY. Welcome to Open Door. Have you ever wondered whether or not the 2008 financial meltdown was a good thing? Well, meet Brian Walsh, who's the CEO of Saguenay Strathmore, a fund of funds with $2 billion under management. He's definitely got a view on this. Let's go see what he's up to. Brian, I cannot thank you enough for having me over today. Before we get into your work career, let's talk a little bit about where you grew up.
I grew up in Quebec City and also spent a little bit of time on the Gaspé coast of Canada. So it's a French-Canadian part of Canada. Spoke up mostly with French kids and long winters like we're having here in New York this year. Played a lot of hockey because that was the one thing you did, and golf in the summer, basically, with a little bit of tennis thrown in.
How did you decide to get into the finance space?
You know, it's funny because where I grew up, the whole educational focus was a classical liberal education, which was you became a doctor, a lawyer, or a priest. My dad was a businessman, and I just always had an interest in economics, of all things, and the markets. So, you know, I went to school in Ontario, and after I did my MBA, I had one desire, and that was to work in an investment bank, and that's what I did. I ended up going to Wood Gundy in Toronto.
Okay, and how was that experience as a young person? What areas did you focus on?
I started in the fixed income department, and then went to investment banking. I was one of the only guys who ever done that, and it was good. It was good for me because I had some markets background going into investment banking at a time when the whole investment banking business was changing. It was the era of the bought deals and things like that. It's frankly what led me to have an interest in kind of derivatives when they were embryonic back in the mid 80s. Okay,
tell us a little bit about derivatives, because a lot of our viewers aren't aware of them, and all they do is associate them with the meltdown of 2008.
That's good. It's good to have a chance to correct some of that history. I hope it was an economic good. Okay. Because it took down financial volatility, in effect. It was so we would go to see corporate treasurers, and they would look at us like we had horns coming out of our head, because we could say, you know, you can enter into this contract, and we're going to take your bank debt and make it fixed rate for 5 years. And they looked at us like, well, who's giving you the money? I said, no one's giving you the money. We're gonna pay your floating rate, and you're going to pay to us the fixed rate, and therefore, you're going to change the nature of your payment. And for companies that, you know, were subject, and there was a lot of interest rate volatility. You have to remember this is only a few years after interest rates were at 16, 17%. So people were really interested in it, and it grew quickly, and it truly did revolutionize finance.
You moved from Canada to the States, and you went to Bankers Trust.
They were really one of the market leaders at the time. And I worked with BT in Canada for 4 years. I ended up running the bank in Canada, and then went with BT to London, where I ran the worldwide derivative business from London, and then moved to New York at the end of 1992, early 93.
Do you think Wall Street is still as attractive as it once was?
They're essentially, as I say in our business today, trying to turn banks more like into regulated utilities, like an electrical utility, so that, you know, they can be big, but they can't be too big to hurt people, because effectively the government is standing behind them. So they got to make them less risky, much more conservative, you know, regulated rates of return kind of approach, and we'll put all the quote-unquote risky business in the investment banks. So I think, you know, for a short term, I think what it means is that the more attractive places to work, SKIDDY, are, you know, hedge funds, private equity, private firms. So I think it's harder for young kids. I was looking at your website, you know, people, but I just, you know, I'm not trying to pitch, not trying to make a plug for your business, but I was looking at it. You have people like Fortress. Yeah. Those are the guys, you know. You have a number of hedge funds on there, and these firms, you know, like the Fortress, the Blackstones, these guys, they're big companies today. They're doing a variety of different things. These are the interesting places.
Where do you think the new opportunity exists?
You know, I still think a lot of the new things is in the alternative asset investment business, because it's still, SKIDDY, it's amazing how small it is. So I think, you know, different types of financing will be done by, you know, more innovative, smaller companies. And again, I mean, I think it means it's harder for people to find it. They're going to need institutions like yours, you know, broad-based, that do both internet and you know, the old-fashioned way, basically. But that's where I think you're going to look and continue to see growth.
A lot of young people out there today are battling with, do I get an MBA, don't I get an MBA? What's the advantage, what's the disadvantage? What are your views on that?
I saw you ask this question to other guys, SKIDDY, so I was afraid to give you the answer. You know, that's terrible, but I don't think it's worth as much as it used to be. And if it depends, I think, what you want to do.
Yeah.
If you're really keen on being in the investment business, I think you're better off doing a CFA. You know, I think a CFA will give you, I mean, will give you more directly related to the investment business. If you're not sure, if you're a 27 or a 28-year-old or 26-year-old, you know, you work for a couple of years, you're not 100% sure what you want, then I think the MBA can really be valuable.
What do you think it takes for somebody to achieve what you have done? What advice would you give people?
I think there's 3 or 4 things. I think number one, it's integrity or values. I think, you know, the second thing to me is work ethic or attitude, you want to call it. It covers up a multitude of sins. And it's also, the attitude part is how you get along with people. You know, you got to be able to work with people. You got to be able to have an empathy towards people. I think it's vital. The third thing to me is writing skills. And then the last thing to me, honestly, and this is something, you know, that's come about the long way, is humility. And you'll learn from your mistakes. You won't make excuses for your mistakes, and you'll grow more, and you'll make yourself more valuable. And at the end of the day, if you can somehow put that mix together, SKIDDY, I think you have the chance to be a Renaissance man.
Again, I'm here today with Brian Walsh, who's the chairman, CEO, and founder of Saguenay Capital. Brian, you've been incredibly successful for good reason. You're a gentleman to let me stop by today. Really appreciate it. Thank you so much.
Thank you, SKIDDY.